Hi traders, good morning. Welcome to this video on the euro dollar and gold of this 22nd of July 2019. Before taking a look at the markets though, be aware of this risk disclaimer explaining the fact that trading for exchange at global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that, and this video is for informational and educational purposes only. And if you're interested in joining the live webinars, check out these links. The top one is a live trading webinar. The bottom one, live educational webinars from Nenad and myself. And of course, if you join and subscribe the FXDD YouTube channel, you will not miss anything. Also, we have videos like this, more of them, basically discussing our analysis. And of course, the live webinars are uploaded as well. All right, this is the euro dollar daily chart, and price is back at support again. This is very dramatic at this moment because this is basically attempt number 1, 2, 3, 4, 5, 6 attempt to break the support zone, and I wonder if the bears are going to manage that. And at this moment, it is a big question mark. I am leaning still towards a bullish bounce actually when looking at the higher time frames. Looking at the monthly chart, let's not forget that last month's low is still very close, and last month's candle was bullish and breaking above kind of a falling wedge pattern. So that could indicate this bearish swing, the end temporarily, and a bigger bullish corrective swing for the moment. Looking at the weekly, I saw candle number 7 not break below a double bottom, all right, and that indicates perhaps that this bearish swing is finished. So, and last week's candle did not break, although it's bearish, it did not break below the low of the 2 weeks before, or the week before and 2 weeks ago. Then from a daily chart, yes, that looks a little bit more bearish indeed, because the moving averages are aligned to the downside. So question is, was this an ABC correction, and is this just a consolidation from upside, or is this a consolidation for a break to the downside? Now that no one knows, but I'm just keeping an eye on the daily candles, and if there is a close below 111.92 like this, then of course with the close near the low, yes, that is a bearish breakout. In that case, probably price completed a ABC correction here, and this is probably also already back into a downtrend, and this is a consolidation for more downside after strong momentum. If there is a candle like that, yes, I would basically change my my view. I'm bearish, and I'm expecting price to make some flag on the maybe 1 hour chart, and then continue lower to test this bottom here, the double bottom, and then if it breaks that double bottom, go down to 110. However, if it fails to show a candle like that, then I'm still leaning towards a 5-wave pattern here on the 1 hour chart, this being an ABC pattern for W, ABC for X, and this is a Y pattern, ABC within that, to complete maybe, for instance, a wave 1 and 2 like that. And up it goes for maybe a wave 3, or if it's not a 1, 2, 3, an A, B, C. So I still think that this is more of a bullish bounce spot. Price will need to break above the weekly pivot. It would need to break above the 21 EMA high. It would need to break above 144 EMA, the R1, this top, before this scenario does become a little bit more likely, and price has confirmed maybe the fact that it can at least break above resistance. If it does that, then it would look good for some upside. At the very least, I would expect price to move up to this 113.50 level, which is a head and shoulders, potential head and shoulders level, left shoulder, head, right shoulder. And it could be a bouncing spot. And if there is strong momentum, that would confirm that. But if price moves up, breaks through it, or if it moves up and goes sideways, then a continuation higher is likely. And I think that price could go, for instance, if we put a fib from here to here, it could go to 115, which is the minus 272 target. So at first, up to here, then up to here, and if it can go further, up to here, and then up to here. Those are kind of the targets and the spaces to the upside. Downside basically has to do something like this. Break pullback continuations before I think that price has some good space to fall to the downside. All right, that's my view on the euro dollar. Gold, XAU, USD has made a great breakout to the upside, in fact, but price has made a way deeper retracement than I expected. And to me, it seemed like a very strong breakout here, and I was expecting a flag and continuation. But it fell all the way back to the 21 EMA, which surprised me because I thought this was a wave 3, and it would go way further before a corrective pattern would take place. So far, price was in a very strong momentum. This looked like a triangle with either, it could be a triangle, A, B, C, D, E. And this is, for instance, a wave 1, 2, 3. I thought that's not the case, it's maybe a wave 1, 2. So still likely to bounce up, or this could have been A, B, C. This was wave 1 and A, B, C here for wave 2, and this was wave 3, which is why I didn't expect price to retrace that deeply. Despite the deep retracement, price is still at the 21 EMA, which is above the 144, so everything is aligned to the upside. So maybe it's not an ABC and a wave 1, 2, 3, but maybe it's a triangle, A, B, C, D, E, and this is wave 1, 2, and up it can go for wave 3. All right, so I was a little bit surprised by this downside because I thought that price is already in the wave 3, but that might not be the case, and it could be that price is in a wave 2. When I saw this, I thought it was wave 1, 2, this is 3, flag, and continuation. That has not happened. So for the moment, let's take a look at this time frame. It doesn't really look like a 5-wave pattern. There's basically 3 waves up for the moment. Let me double check on the 50-minute chart. So that makes it a little bit awkward because it is not, even this pattern is not as impulsive as I would expect. It certainly looks bullish. Moving averages are aligned, and there was good momentum here and a good correction, and again good momentum. But this retracement and the lack of a 5-wave pattern here make it, from my point of view, the breakout a little bit tricky. And although there's a fair chance that price will just use this weekly pivot point for a bounce and continue higher, it does make me a little bit cautious, and I'm a little bit on guard at the moment because although I traded the break to the upside, I think that I decided not to continue because of this, this basically strong move down after the break. Good breakout candle, but that bearish candle after that doesn't look that great and was quite bearish. Weekly candle had a pretty big wick. So I'm not sure if this breakout is really as sustainable as I would like to see it. It could still be just a false breakout and then still move higher. But for the moment, yeah, the bears and bulls are sort of in balance at this point. Let's see how price responds to the 21 EMA, whether it breaks above it or below it. All right, traders, that's it for the moment. Check out the FXDD YouTube channel to find out all of these videos, of course, and wish you all good trading in the meantime, and see you very soon. Cheers.